Hi everyone, welcome back to the channel. Today we are going to be talking all about vacation rental properties. Now, buying a vacation rental property is an incredible way to invest in real estate. You can offset home ownership expenses and enjoy your favorite vacation spot as a secondary home. These properties can generate high rents, but they are seasonal and have high operating and maintenance costs. So, learning how to invest in vacation rentals will require in-depth knowledge of local markets, financial calculations of income and expenses, and an understanding of the real estate buying process. So, first things first, you're gonna want to research vacation spots and narrow down potential locations. Now, in this case, we will be taking a look at this 2-bedroom, 3-bathroom apartment located in the Jewel Grande Resort and Spa Hotel located in Montego Bay, Jamaica. So, once you've narrowed down your search a bit, you might want to consider a couple of things before you make a decision on buying a vacation rental property. Couple of questions you might want to ask yourself. Would tourists like to take a break in this area? What types of attractions are nearby? How does the location's popularity peak and fluctuate throughout the year? And is there sufficient and consistent demand for a vacation rental in this particular area? And with that said, this apartment definitely checks all the boxes mentioned earlier. With it being strategically positioned within a resort, homeowners can access a hotel's amenities. Spa services are offered at a 30% discount. There is access to the gym, the restaurants, and of course the beach. Now, when the apartment is not occupied by the homeowners and they want to rent it out while they're away, they can absolutely do so through platforms such as Airbnb. Homeowners will have to pay a 10% of the quarterly maintenance fee as part of administrative costs to the strata. And with all that said, guests will be able to indulge in the hotel's amenities once they are occupying the apartment. So, what else do you need to consider when looking at investing in a vacation rental property? Once you have identified a location and found a few suitable properties, you want to be sure that it is actually feasible for your budget and meets your needs. You will need to calculate whether or not you'll actually be able to make any money from your property. Always examine the costs of nearby vacation rentals and compare them to your monthly financing and operational costs. In the case of this apartment, the HOA fees are $3,905 per quarter. Each private apartment is metered for electricity and water and is to be paid for by the homeowners. Homeowners are also responsible for their individual insurance for the unit. Other expenses you will need to factor in are property taxes and maintenance and upkeep of the actual unit. Now, if you find after you have done your research that the property will be a profitable investment, you're now ready to move forward with the property purchase. The question simply becomes, will I be making a cash or finance purchase? If you are going to finance the purchase, you will absolutely need to speak with a lending institution. A loans officer will guide you accordingly on what it is that you are able to access in terms of a loan amount. Once you've gotten that squared away, they will provide you with a pre-approval letter, which you will use in order to make your official offer to purchase on a property. Now, when submitting an offer through a realtor, there are a couple of supporting documents that we will require. These documents are a copy of your driver's license or passport ID, a copy of your tax registration number card, also known as your TRN. If you do not have your TRN card or a TRN, you will need to then provide your social security card if you are from a foreign country. A recent utility bill in your name for current proof of address is also required. And last but certainly not least, the proof of funds. If you are going to be financing the sale, that will be the pre-approval letter that you would have received from the lending institution, along with a bank statement showing the cash deposit of 10% of the list price. If you are going to be buying all cash, then we would just simply need a bank statement showing the total amount to fund this purchase. Once the sale is complete and you have spent a couple of nights in your new vacation rental property, the next step you are going to want to take is to advertise your property online. A vacation rental strategy is not complete without a place to advertise your property to vacationers. Start marketing your rental home on websites like Vrbo, Airbnb, Booking.com, and even HomeAway.com. Advertising your rental property to these platforms will help you gain more exposure and thereby improving your occupancy rate and potential income. Now that you are the proud homeowner of a vacation rental property, it is absolutely vital that you conduct renter screening. That way, you can choose suitable and qualified renters for your vacation rental property. A few tips that I would recommend you follow are to check and review the vacationer's basic profile information, such as their phone number, email address, their age, job title. You should also check their social media account to actually verify their identity. And lastly, you could check the vacationer's reviews. So, what are the pros and cons of buying a vacation rental property? Most investors will ask themselves, is owning a vacation rental a good investment? While owning a vacation rental property is often a pleasurable experience, there can be drawbacks that you may want to consider, such as maintenance and management costs. However, if you are considering investing in vacation rentals, here are a few things that you may want to consider in terms of the benefits and the disadvantages. So I'm just going to dive right into the pros of owning a vacation rental property. To kick it off, a vacation property can provide an additional source of income. Rental income can help to offset property and vacation expenses. You will also be able to take advantage of tax write-offs. The property's value could also potentially skyrocket. You're also free to use the vacation rental property whenever you want. And finally, you're able to build your equity and your wealth. Now that we have covered all the benefits of having a vacation rental property, let's look at the disadvantages. So, what are the cons? Whether the property is rented or not, you will be responsible for utilities, maintenance, taxes, and property management. Ouch. Yes, this is in fact true, but it's just a part of the program. You will also have to pay a property manager to oversee daily operations in most cases. Vacation rental properties are typically hit harder during economic downturns because people often pass or lessen their vacation trips in order to save money. And finally, another thing to consider is that since vacation rental properties are seasonal and off-peak seasons generate lower per night rent, cash flow tends to be inconsistent. With all of that being said, here is the bottom line. In order to significantly impact your potential cash flow and investment, it is absolutely vital to carefully research and strategically purchase the right vacation rental property. Buying a vacation rental property can be both risky and incredibly rewarding. Therefore, I would implore anybody who is watching this video to use the information provided here, and more so than that, use a realtor. A realtor can save you so much time and energy when finding the perfect vacation rental property. So, 2 questions for you, the viewers. What were your thoughts on this apartment listed at US $1.1 million? Do you think it is worth it or not? Also, would you want to invest in a vacation rental property? Comment below, and once again, thanks for watching. See you next time.